Hey traders, Parker here with an update to the up buy sell pressure average momentum oscillator. As you can see, you're looking at two screens. The reason why I did that because I wanted to show you the Heikin-Ashi version, and then I wanted to show you the buy sell pressure version and how the two differ. You can see right here on the buy sell pressure version of it, you can see right here you got this dip, and then you got this the arrows represents positive divergence and negative divergence. And you can see right here you got your negative divergence here, and you can see you got your down move from there, and the SPY is really just selling off. And you can see how this one's kind of bumpy, and it's quicker. It's gonna be faster than the Heikin-Ashi. But for the most part, the Heikin-Ashi is going to be a lot more smoother. But you can see right here, the Heikin-Ashi didn't really, it labeled these as it's coming up from negative into positive. And over here on the bicep pressure, it pushed up immediately. And that's one of the other reasons because this is on exponential average, and this is on exponential average as well. But the bicep pressure caught this one a little better on this one right here. But it's not as smooth as this one's gonna be over here, because because of the bicep pressure version of the Heikin-Ashi is smoothed out a whole lot more than this one right here. So I would use the bicep pressure one. I say the bicep pressure type more so than I used the Heikin-Ashi, but a lot of people liked it when I was using it on the Heikin-Ashi. But that's one of the differences between them. And this one, because Mike, you asked for this one to be multi-time frame, so it's multi-time frame. You can see you have the original, and then you can go to the multi-time frame. And right now I have it set at 15 minutes. And you can see how the indicator adjusted. It shows you had some positive buying pressure over here on the 15 minutes, even though it didn't hold, but you got this push up. The same situation over here. You had it over here, and you got this push up. When you go to the when you do it on a multi time frame, this label is gonna change as well, but it's not gonna work as good. And yellow shows you there. It's a warning. Basically, something's not adding up, but it's still keeping track of it on the 15 minutes. It's just not gonna show the right colors. Like this one moves from this orange color is represents really just red, but when you put red in the label, you really can't see the letters. So I made it orange, and then it goes from orange to pink to bright green, or bright green to dark green to orange. And so the label will change the color according to the momentum. And we'll switches back to the original, and you can change anything like I always say, everything I create is fully customizable. You can see down here you got these colors of these bands. The lower band and upper band is basically if you have multiple divergences in a certain area, it actually create a cloud, but don't worry about that. um you have your up you have these different colors that you can select from on those globules, and that's really just coming down here to the diff and all this other stuff. So don't worry about any of that stuff. Really, this right here is just showing you it's negative momo to the downside. It's changing the color of those candles. This pushing out. That's all it is. So negative momentum to the downside, negative momentum up, positive momentum down, and positive momentum up. And like I said, don't worry about any of that stuff. But you can come in there and you can change the colors of the candles that is pushing out. Same situation here with the momentum. You can change those colors, change the positive, negative divergences. You can change the difference on the actual buy sell pressure here as well. So you can add in all of those features to this indicator. You can actually scan with it as well. Not the actual indicator, for whatever reason, the code is too complex, but I'll put in the scanner as well. When you see on my Etsy shop, you'll see that this comes with the scanner. So those two come together, so we can scan. I think I had it initially for negative divergence, So we're looking at negative divergence right here on this scan. So buy sell Momo scan, ND stands for negative divergence. So we can go to any of these stocks and see that they have a negative divergence on the day. So Lucid, LCID. And Lucid is basically just fell off that cliff. And I'm going to move over to one screen. And you can see over here the difference, once again, the difference between the two. And let me change this back from MTF to the original. And you can see from here, you can basically see everything. And you can see this move occurred right here. It kept you in this trade all the way to this bar. If you wanted to get out on this dark green bar. Or you can see over here, like I said, the momentum, the buy sell pressure one is going to have more bumps in it just because it's tracking the actual volume and according to the buy sell pressure formula. So you got positive divergence here, pushed up. You got some negative divergence here, but it kept pushing up. Even though you got another negative divergence here, buying volume is leaving, but the price continue to uptrend up until this point, and you got this negative, your last negative divergence, then you got the downtrend. You only got this positive divergence over here. You got negative divergence on this one, but you got positive divergence over here. You're going to get negative divergence on the hike and ash to let you know, hey, something's wrong, or you probably want to looking to get out of the trade. But this is one of the ones it's negative, showing negative divergence on the day. So we'll go to the day, and I believe I still have everything set for 12. So yeah, that scan is set for 12 as well. So here's your negative divergence. You can see this candle. Look what the candle looks like. It's almost like a gravestone doji or a blow off top, in my opinion. That's why I call these candles, because basically you blew off all this pressure, just blew off, and it couldn't sustain it like a regular bar. But you could have scanned for the same buying positive divergence over here and got this. But it doesn't always work. I'm not going to say it doesn't always work, but you have to wait for the next signal to, hey. And I would have got in over here on this hammer candle right here. Or I would have waited for, I would have set an alert to get in once it broke above this high, this hammer candle. So we can go back to the scan and let's look for something that shows positive divergence. So we'll look at positive divergence. And this is how you basically use the scanner, or use the indicator. Use the scanner with the indicator. So everything is turning red, but all these have positive divergences on them. So the greatest percent change is HLIT. And look what we got. We got positive divergence here, positive divergence here. And even though it didn't move up very high, it could still push up more. You got negative divergence here, but when we look at these divergences, we looking at them in accordance with pairing with another indicator, possibly telling us to give us more information, because you don't want to rely on one indicator or one thing to give you tell you when to buy or sell or anything. And for that purposes, this video is for educational and entertainment purposes. I'm not a financial advisor or anything, but this indicator has helped me. The indicator that I've developed has helped me make better choices, especially when it comes to buying and selling pressure or buying and selling volume that I see on the candles, especially when you mix price and volume together. And that's what helps me out. And this is also part of my VPA collection. But like I said, this updated version would be a part of a new VPA collection. VPA or VSA, Volume Price Analysis or Volume Spread Analysis collection is coming out with a lot of new features to some of the old indicators that I showed you. That as I've gotten more information, the situation has changed, or my perception of these things have changed. And you can see right here, you have positive divergence here on this lower wick. For me, what I would do, because it's a daily time frame, I would set these two lines like this. Or I would look at this right here, this gap, and I would possibly do something like that because it's trading within this range, and I would look for a break above this gap area right here. And we'll just put another one right there. I make my gaps pink just because on the daily when I see them, you know, it's a warning sign for me that, hey, this might not go any higher. You can see all this consolidation, and let me make this a little bigger. If you are a student of white cost, you can see right here, here's your sell-off. Here's your range trade. And if you want to, you can say, this was the high of the range, this was the low of the range. And you can see it's just ranging right here, and then it finally got this break above. Where's the... If I was to put my volume deal on, you could probably see the spring volume. There we go. And I'm going to change this back to pressure. Where would the spring be? This light volume. Probably so, this light volume. This last push down before the actual move up. I was looking for, you can see all these irregular bodies down here. The blue triangles represents big bodies, low volume. I was looking for one in particular to show like the spring in this. But this would be the drop, this would be the base of consolidation, then this would be the rally. Or another sense, this would be the drop. This is be where accumulation phase. So this would be the selling climax. No, this is the buying climax up here. Then your drop, then your accumulation, and then over here you got your selling climax over here, where you got this push above. So that's how you would read that. But yeah, I would look once I did my scan. I would set these levels up, and I would go ahead and go from there. If I got this right here on this scan right here, so I would be looking from here back on the screen. I would probably set my Fibonacci levels like this. I would look at 12, 22, and what was that, 825. I was throwing some fibs as well, and I would just find these bumps, and I definitely, you definitely need to wait, get this break above this. But for the most part, really this gap area right here, look for a close above this gap area, and ride it along from there. And for one of the guys I've been listening to, Dr. Ted, he talks about Heikin-Ashi. He really loves Heikin-Ashi. So you would just wait for Heikin-Ashi to get in there as well, and just look at the trend. And that really just gives you a great view on things, because you can see this drop, base, rally. But for the most part, that's it. I really went too far, but we'll go scan for another stop. But this go around, we can look at the momentum, and we're going to change this to a value. So we're looking for a value that is greater than or equal to 20 within, just saying that the momentum average is buy sell volume average is above 20%. So we got a lot of stocks. So CMRA, we'll go check that one out. Let me get out this Heikin-Ashi, and we can go look at it. This is above 20. So we're just looking for anything that's greater than or equal to 20. So this one, the momentum is actually above 20. So that's positive for us. Or we can just say momentum above 0. And that's going to throw you back a whole lot of stocks. But I just put in 20. So we'll go look at this one. And as you can see right there, it had a good day, but it's bouncing on this 50, right? The 50% retracement level right here. So in one sense, I was looking at this one earlier before I made the video, so I marked out all these lines and everything. you can see right here it's stuck in this range. So it may come back and retest this bottom again. But if it breaks below, I expect it, to continue down lower. But it may stay right here and finally break above. And that's pretty much everything I can think of to show you with the indicator. So these are the updates. You got the original, you got the MTF is multi-time frame. You got your average. You can change the average type. You can show the label, not show the label, paint the bars. You can change this to the Hikanashi. And you can hide the cloud. Don't worry about the cloud. It's only going to show up if you have two divergences in the same in back to back. So we're not going to worry about that. And that's pretty much the end of this video. I think I showed you everything I had to show you. You can, when you're using the scanner, you can change the exponential. Then put the Hikanashi stuff in there. Because like I said, and I demonstrated that it just shows more true with the bicep pressure type of trend versus the Hikanashi trend. And I wish you all the best. You can find the link to the indicator in the description. I wish you all the best and God bless. Stay safe out there. And I really appreciate everybody who's been showing love and appreciation for the channel. If you haven't already, please like and subscribe.